Well, well, well. How the mighty have fallen. WP Carey is a REIT that has stood alongside other REITs as a titan amongst the REITs, along with big names such as Realty Income. As a matter of fact, if you were to call Realty Income the Coca-Cola of REITs, you could almost say WP Carey has been the Pepsi. In a lot of ways, quite similar, while at the same time different. WP Carey is down 30% year to date. This represents a low that we haven't really seen since these bottoms we saw during the height of the pandemic and COVID, during the maximum point of fear that the world was basically coming to an end. Now, the interesting thing is, that's pretty much when you would have had to buy this company to currently be up in terms of price anyway on your position. Granted, with dividends reinvested, etc., your total return could be better thanks to the dividend. But frankly, it's shocking how a REIT that was perceived as this strong for so long could fall so far, so fast. But at the same time, I think this goes to show you that it's possible to be conditioned to be willing to pay too much for a good thing. And I will say, I think WP Carey is potentially a good thing. It's not as though they have bad properties, bad tenants, anything like that, in my opinion. I think it's just a number of factors coming together to work against them at this point in time. There are just a few things going on that don't really bode well for WP Carey. So one of them is office, okay? WP Carey owns some office properties. As some of you may be aware, a certain amount of work from home has been sticky, which has been trouble for the rents and buy and sell prices commanded by office spaces. So office properties not really perceived very well right now. And so WP Carey is planning on sort of moving away from office going forward, which is why they're spinning off their office properties, okay? The other thing is the dividend. It seems as though the streak is coming to an end. WP Carey, like Realty Income, as I said, they were basically Coke and Pepsi in the REIT space, also had a greater than 20-year dividend increase streak. In fact, now the conversation is about a possible cut, which sort of makes sense because some of their properties are no longer going to be directly a part of WP Carey. They'll be spun off into their own publicly traded REIT. And that rent revenue is going to be, going away. Also, interest rates are higher. WP Carey has debt, okay? They've got, it looks like, $8.6 billion in total debt, okay? Debt means interest, and as Marlo Stanfield once said, price of the bricks going up when it comes to interest, okay? So it makes sense that they've got to maybe do something in order to be able to service this debt load. And honestly, with the cash that they're paying out in dividends, okay, it seems like that's an area where, they could trim something back, right? I mean, I've already, one REIT that I own has had to do this to preserve cash because you have to make those interest payments. And if you have to refinance at a higher interest rate, the payment is going to be higher. Also, of course, I have to mention part of the reason for the decline in WP Carey's share price is probably because the rate, the yield you can get on low risk bonds, or basically risk free. I say that in quotes because basically treasury yields are considered the risk free yield. They're not. There's no such thing as like 100% risk free. If enough things go wrong, there's always a risk. But I think when you reach the point that something goes so wrong that treasuries aren't safe anymore, you've got way more to worry about than the balance of your portfolio. But anyway, since the risk-free yield you can get is now substantially higher than what it was a couple years ago, people probably said, hey, why be in WP Carey at like 4.5% or whatever they were a year and a half ago, when you can get that much on CDs, high yield savings accounts, and a lot of different kinds of bonds nowadays, right? Much lower risk. And there are certain people who are in a position in life where that makes more sense. So they're going to pull money out of things that they were in for the yield, like WP Carey, and they're going to divert assets into those sort of safer yield investments. Also, the balance sheet for WP Carey reveals book value of about $43 per share. If the share price keeps declining the way it is, we may see a point where WP Carey trades around or even below that book value. I have to admit, I would be a lot more interested if we were there, because I do think in the long run, real estate will be okay. There will probably be points in the future where interest rates actually decrease. And I think WP Carey is one of those that can probably weather that storm. I think some point in the future they'll get back to raising the dividend, and all will be well in the world again for WP Carey. It's just about the patience to get there. Now, when it comes to their tenant risk, their diversification, etc., again, their top 10 tenants are spread out in a number of different industries, and even spread out extremely wide and far geographically, okay? Everything from schools in the US, automotive manufacturing in North America, retail properties in Poland, self-storage in the US, government properties in Spain, though those are office, so maybe they get spun off if they're a part of that spin-off situation, or sold. R&D manufacturing in Canada, B2B wholesale in Italy and Germany. Like, it's a pretty wide spread of different things, all right? And when I look at the geography of it, like 3 continents, it looks like at least, maybe a dozen countries. I like that. It's not overly concentrated, and like all their eggs aren't in any one basket, okay? And that's a good thing. I think overall, a portfolio like this is probably going to do decently in the long run. But your return is going to depend on what you pay. And I think for most of the last 5 years, it's probably been a bit overpriced. And at the moment, it looks potentially like a value, but in all honesty, I'm going to sit and wait on this one. Again, if the share price falls beneath book value, I would be much more compelled to actually consider buying some. At the moment, I'm content to sit and wait, especially while we wait to see like what the future of the dividend maybe looks like, how that office spinoff actually affects the financials of the business, etc. So that's where I'm at with WP Carey. Let me know in the comments below if you have ever owned any shares of WP Carey, if you still do, your cost basis, how you're doing on the position. Let me know if you would consider buying it in the future, if and at what price you would be willing to pay for it. Also, join the Discord, link in the description, and catch us on Cashflow Kings Live, link in the description to that as well, on Saturdays. I'm happy to make your acquaintance. Join us in the chat. Have a wonderful day. Cheers.